Today I want to take some trade based on candlestick analysis and price action. Okay, I'm seeing some buyers, two buyers entries here. Oh, too late. Okay, I wanted to go with buyers, but be too late. This is buyers area. Okay, this is also sellers area. It creates a new high. So I'm going with buyers on the next candle because of this new high. On the see, this is where sellers entered from this level. Then this candle create a new high. Okay, so I think buyers should enter to fill the gap. Now is strong buyers. Now I can see rejection from sellers. Rejection from sellers. Okay, so I go with sellers here because of this rejection from sellers and still at the sellers area. So that is why I go with sellers. The next buying zone is here. So I go with lower option because the next buying zone is here. I expect sellers to enter the market. Go with sellers again because I expect sellers to continue to this level. Now sellers has reached the level. Let's see what's going to happen. So now the candle is at the buyer's zone with a little or no rejection. So I think next candle here should be bullish. Buyer's area, reversal sign. Strong bullish candle from buyer's area. Next seller's area is here. I think I've taken 7 trade. This will be my last trade. A quick rejection from seller's area. You can see the rejections coming from the seller's area. Rejection, but we have this bullish movement, so I'm going to stop here. Okay, so I think this is from the beginning. $4. Actually, I'm having a $5 account. I've taken some trade today, then I withdrew, and I have a $5 left on my account. So I took the first trade here. I took the first trade because we see the market is down, right? Okay, so sometimes you trade in the direction of the trend. Okay, because this is buyer's zone. This is buyer's zone on the left side. Check on the left side. You can see so many weak rejections. Okay, if you know, if you don't, if you want to know how to learn, if you want to learn how to draw buyer's zone, well, I'm conducting online course this month. Okay, so in case you want to join us, just check my contact details in the video description below, so that you will learn so many things, and you get information. So what I'm trying to say is that this is buyer's zone. The market, anytime the price reach down, it rejects. The price reach down, it rejects. You can see rejection, 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 buyer's zone. So this candle got rejection from the buyer's zone. This this candle. It got rejection from the buyer zone. The market also retrace. Also, we see a rejection from buyer zone. Buyers entered. Okay. Now you might be wondering, why did I? Is it this first trade? Okay. So you might be wondering, why did I even go with buyers here? Even this candle did not reach this level. Well, I saw this candle reject from the buyer zone, which means that the next seller zone will be above. When market is moving, when the price is moving, once the price is going down, once it reach buyer zone, it reverse. And once it reach seller zone, it reverse. Once it reach buyer zone, it reverse. So that is how the markets move. Okay, that is how the price moves. Candlestick, especially candlestick. Okay, so here the buyers reject the market here, then buyers entered. So I draw the level which I expect sellers to enter. I think the level was right here. Yes, the level was here. Okay, you can see on the left side. I'm using the left side to draw the levels. Okay, if you want to learn how we should place the lines, well, you should join the VIP. You should join the VIP group. Okay, so in case you want to join the VIP group, check my video, check the video description below so that you see my contact details on how to draw. So I'll teach you how to draw buyer zone, seller zone. We have three trades key level. We have the level itself, okay? We have the area, we have the zone. A lot of people are confused that we, how can we identify these three entry points? Okay, so when you are trading, there are three things that usually occur in the market. There are three entry points that you can enter the market: enter the level, enter the area, or enter the zone. Well, you might be wondering, are they different? I can tell you that they are quite different. They are quite different, but they have the same. Okay, so this trade section I just took here, I'm taking trade based on buyers and sellers area only. Buyers and sellers area only. If you look here, you see multiple rejections, indicating that some sellers around this area become a support after this breakout. Okay, so when I saw this candle here, I was expecting the next candle to form a green candle to reach this point before I go with sellers. But fortunately, the market touched the level, a quick rejection from the level, then sellers enter for 1 minute. Okay, now I now go with buyers again because of this new high. Look at this previous high. If we check this high, if we look at this high, the previous high, this high, connect it to this high, then this high. This high break this. If you draw a trend line, this high, this high is the new high. It break this previous two highs. So it creates a new high above this line. So that's why I call it new high, which means that when you see a new high, we are expected the market to fill the highs. Okay, we are expected the market to fill the gap, the closing price or the opening price to the new high. We are expected the market to fill the gap. That is why I go with buyers. So I expect buyers to fill the gap here. Okay, I expect buyers to fill the gap. The market hasn't reached the buyer zone yet, but I expect buyers to fill the gap. That is why I go with buyers on the next candle here. And here I go with sellers because when the buyers fill the gap, it stop exactly at the sellers zone with a huge rejections from sellers. Okay, remember I have drawn the seller zone on the left side. Okay, this is a support, also a support, and here we have the sellers. So after the sellers are not interested, the buyers break the level. But now we see the sellers now are interested. Okay, The sellers now interested because previous candle got rejection, create a new high, then the next candle close inside the area. So that is means the sellers are interested. So that is why I go with sellers on the next candle. You might be wondering, is this a new high? Yes, it is a new high. Why didn't I go with buyers? No, that is not how to trade new high. You must have to understand the logic behind new high and new lows. Don't just think the new high will be a continuation pattern for you to trade. No, that is not how to trade new high. If you want to trade new high, you trade in according to the motion of traders. Why should you high go with new high when the market has already reached the seller's area? No. If the market is still far from the seller's area, let's assume this green candle close somewhere around here, then has this new high. I will still go with buyers to make sure that the buyers fill the gap. Okay. So that is why I go with sellers here because candle close at the seller's area with a rejection. Then the third trade, go with sellers again because the next buyer's area is here. Okay, remember I told you the market will be moving up and down, like bouncing from buyer's area, seller's area, bouncing from seller's area to buyer's area. Okay, this is also buyer's area which I've drawn on the left side. You see so many buyer's entries. There, this is a fake breakout. Here you see again we see buyer's entry, and that is where this candle reject. Okay, you might be wondering, why didn't I draw buyer's area from this level like this? You might like to ask the question, why didn't I use these rejections as buyer's area? I can use this particular area here to draw my buyer's area, but I don't want to do that. I want to draw the bias area from the origin of bias area. So I don't want to use the current area as my bias area. Okay, this area created these bias entries. Okay, so I knew the bias next bias area is here. So the candle, after reversing from seller's area, the next bias area is here. This is not bias area. This is the entry point for the buyers to fill the new high. Okay, you can see this candle reject. This also reject, which means that from this first line to this line is where the buyers are waiting to buy the market. So this candle close here, okay, not here. So that's why I go with sellers on this next candle here. I go with sellers on the next candle here. Then the fourth trade, I go with sellers again because this is the area I expect buyers to enter, right? This is the area I expect buyers to enter. So I go with buyers, I go with sellers again. So sellers has to feel, you can see the gap, the closing price to the buyers area is still, the buyers area is still far. So the sellers has to fill the gap. Okay, that is why I go with sellers. Now, when the sellers now have reached the buyers area, okay, there's one thing that you need to observe. This candle only fill the gap because the sellers are exhausted, and that is why the market changed direction to the upside. You can see this is now a bullish trend. Here, the sellers are exhausted. They use all the money they have, so they don't have any other thing to sell. So that is why they formed a strong candle here, a momentum candle. So when the candle now closed inside the area, I was expecting to see rejection. Remember, if this type of candlestick will close inside this area, there are two things that usually occur. Let's say this big red candle close inside bias area. Let's assume this is the bias area, then big red candle close inside bias area. Okay, there are many things you must observe in the candle itself. Well, where did this candle come from? Is it from the seller's area, or is it that the market is forming green red pattern, or is it from the down downtrend? Okay, so you have to consider it. But in this case, this candle comes from the seller's area. So the sellers are here. The sellers are here. So why is it that the market has to leave the seller's area, then jump instead of forming small candles like this? Instead of forming small candles like this to fill the gap, but it only form once and reach the level, the buyer's area. It indicates that the money they have, they thought the buyers wouldn't mind of buying here. So that is why they asked to fill the gap. That is why the sellers entered. Now, the candle itself, the pattern, the candlestick pattern also matter a lot. If the candle close as a marbozu, you know what I mean by marbozu, no shaven top, sorry, no rejection up, no upper rejection, no lower rejection. The sellers will still form one small red candle with a rejection to show that we can't take this anymore. We give up. So buyers will start buying. Okay, they have to form what the sellers has to form one small red candle in this box, but there's nothing like that. So the candle close with a rejection. That rejection is what I'm waiting for. Okay, that rejection is what I'm waiting for. If this rejection did not occur, I won't take the trade, or I wait for the next candle to form to see how the market is going to do. Okay, so that rejection indicates that there are some buyers that are trying to enter from this box. So that is why I go with buyers on the next candle because of this rejection, and my entry is good, so buyers entered. Now, this first line and this second line is how I indicate it as buyers areas. Okay, first and second line, buyers areas. Look at this candle. This candle is still at the area. This candle is still at the area. Then it has a upper rejection, which means that there are some sellers who are waiting to sell the market around this area. There are some sellers around this area. Okay, because buyers try to go up, but sellers reject them. Sellers reject them because of this strong bearish candle. Assuming that there's no other strong bearish candle, we can't expect a rejection here. Okay, so because of this strong bearish candle, it bring all the sellers from, that means it asks the sellers that are waiting around this area, the sellers that are here around this area now came to this level, which means that the sellers now are here. That is why the price was rejected from sellers. So the market rejects. Okay. But it's still at the bias area. We must respect that. It's still at the bias area. We shouldn't go against the major reason why we took the trade here. Still at the bias area. So with this huge rejection, and if you look at this candlestick itself, what does it tell you about? It tells you that this candlestick is what we call inverted hammer. Inverted hammer, when you are trading support and resistance, trading candlestick pattern, always trade inverted hammer at the support, hanging at the resistance, hammer at the support, shooting star at the resistance. Okay, so this is how you trade inverted hammer. So the market is at the buyer's area, then this candle form, the pattern of this candle is inverted hammer. So it's still at the buyer's zone. That is why I execute that buyers should enter here. So I knew the bias is going to enter here, but my entry is quite late. But anyway, I still want the trade. Okay. Remember, there's one thing I was observing at the same time within this area. Because if the market is, let's say the market drop, then the market is going to reverse to the upside. There are so many patterns that usually occur around this area. There are so many patterns that will occur around this area. The pattern the first pattern which I was expecting is that if this candle will close, after we have this strong red candle, then we have this small weak red green candle that also has a new low. Okay, it creates a new low. This weak green candle with new low. So it indicates that there's something that will occur here. It is either the market form red on the next candle or form green on the next candle. But because the market is still at the buyers area, I go with buyers because I was expecting a pattern to form, pattern which I call morning star pattern. Okay, I was expecting the pattern to form a morning star pattern. So if you look at these three candles, it's morning star pattern. If morning star pattern is going to form, there must be a new low. Look at this low here. Okay, when I saw this low and this candle is still at the buyer zone, I know this candle is going to form. This type of candlestick will form. I already know this type of candlestick will form, just that I don't want to this I would want to explain that during when I'm trading. So only when I finish trading, then I will explain. Okay, so I know this type of candlestick will form. The candle will form based on these previous two candles. Okay, so when you're having a morning star pattern, you have a strong red, a weak green candle, followed by a strong green candle. The green candle should not overpower this red candle. Okay, but if you have something like this, if this green candle here is going to overpower, so let me do it this way. If this green candle here is going to overpower the red candle, which means that this red candle itself should not be strong. At least should be something like this. Then green or red candle. You can either have a green or red candle here, followed by a strong green candle. It's still a morning star pattern. But if we have a strong red, then green or red candle, green or red candle, and the type of the pattern here, the type of candlestick that will form here, the formation of the candlestick can either be inverted hammer or a spinning top or a doji. Then definitely we are having a small green candle. The candle should not engulf or should not go above this red candle. Okay, so when I saw this red candle, I know the market is going to close like this. But if this candle is very weak, let's assume this candle is very weak, not that strong, or very small candle, then this candle form, then definitely I'll be expecting a strong bullish candle. Also, these two pattern here, they are called morning star pattern. Okay, they are called morning star pattern. So this is a morning star pattern. So that is why I know the market is going to form a morning star pattern from buyers area. That is why I go with buyers. So now the last trade I took here, I go with buyers because I again remove the line, draw sellers. I again remove the line to draw sellers area. Remember, I'm using this the psychology around this level to draw sellers area. Okay, so don't worry, I'm going to show you, but only the VIP students. So in case you want to join the VIP or you want to become a VIP member, a BFT VIP member, you should check my contact details in the video description below. So this area here is what I expect it to be, sellers area. Okay, I expect it to be sellers area. Okay, now, so I was expecting that the market should continue to this area here. So once the price continue to this area, the next candle should reverse. But that was that was the end of the trade, so I didn't take any other trades. So I stopped trading. Okay, so what I'm trying to say is that the reason why I go with buy sell because after this morning star pattern form, you see the market change direction to the upside from buyer sell 3 points. So the next sellers area is here. I can't go with sellers based on this support here. Okay, I can't go with sellers like that. That is not how I trade. This is not the origin of buyer's entry point of this support or anyone you call it. This is the origin because we have multiple rejection here, very multiple rejections up and down. So this area here creates this area. So I can't use this as the support. Though I can use it based on the knowledge of how I picture this level. I can use the area here based on the knowledge of how I picture this level. So without going to the left side. But just for clarity, so I have to show you guys that this is the level or this is the area I use for drawing the buyer's area here. So definitely sellers area should be above here because you see Buyers entered, the market rejects, sellers entered, buyers entered, sellers entered. The candle closed inside the buyer zone, so sellers entered. So if you also look at it on the left side, it also a buyer's area. But when we have this run over or the candle close below, we have the market retrace back. Okay, so this is what this movement is the breakout, is the breakout. This movement is the breakout. Okay, so all we have to do is wait for the market to retrace. So we have this retracement, the sellers entered, retracement, sellers entered. So sellers entered based on what has happened on the left side. Okay, look on the left side. Look on the left side. Okay, we have a downtrend, market reverse, which means that buyers are there. So let's see what happened. How did market break the level? Started from here. Look at this. This is a false breakout. Okay, we have this breakout here. Market supposed to retrace. We have this breakout. Market supposed to retrace back to this zone, but fortunately sellers are not interested, so the market went through it, close above, price above. Then again we have another seller's entry, so the market supposed to make retracement. Where the retracement did occur, sellers entered, yet a fake out, sellers entered. Now the market make another retracement, sellers entered, retracement, sellers entered. It means that when sellers start entering the market, started from here after this breakout. Okay, started from here after this breakout. After this breakout, so many breakouts here, so many run over here. So it become sellers. So anytime the market rise up, the sellers enter. But unfortunately, sellers are not interested in the market again, but buyers break it. So now it become support. Okay. So here, if you look here, this movement here caused the price. After the movement, market retrace, so it caused the buyer's entry. So buyers entered the market. Okay, resistance here becomes support, support here. Then now we have this movement here, this breakout. So market first make a retracement, reverse, retracement, reverse, retracement, reverse. So definitely that is our sellers area. So that is why I go with buyers. Open the market is going to continue to that level before it finally reverse. But fortunately, I won the trade. Close. I didn't go beyond. I didn't trade more than 7 trades. So that was my plan for this trade section. Okay. Now look at it. You can see the market did continue, but got rejection from that level, then close as a doji. This type of doji, you know, a lot of people are still confused about how to trade a doji pattern. Okay, doji pattern just like a neutral, like spinning top, and we have different type of doji. We have the red doji, we have the green doji, then we have the white doji. This is the white doji. We have red doji. The red doji usually have color. Okay, a tiny body but still have a color. Also a green color, so that is green doji, but this is white doji. And also this type of candle, this type of doji candlestick is a continuation. It's a continuation doji. Okay, see the upper side and the lower side. The upper rejection and the lower rejection are the same length. Okay, but if we have this, if this type of, let's say if this type of doji happens to, let's say this type of doji, this type of doji happens to occur here after reject from this point, happens to occur somewhere around here. Say let's say after this candle, then a doji candlestick form like this, we can expect seller's entry. So this type of doji is a reversal doji. This type of doji is a continuation doji. Okay. Also, we have the doji flat. This doji flat doesn't have rejection. So this doji flat usually occur during bad market. Okay. Sometimes this type of doji can also continue the market. It depends on how you trade it. But if this type of doji occur at the resistance, okay, this is going to reverse the market. This is going to continue the market. Or again, if this doji here, if this doji happen to occur, let's say, um, this is support, and this doji happen to occur here, it's going to reverse the market. It's going to reverse the market. Let's say the market is reversing to the downside. It's going to reverse the market, or the market break support, and this doji candlestick form, it will continue the market. Okay. Or if this doji happen to occur here, then let's say the market break resistance, and this doji candlestick formed, is going to reverse the market. Don't worry, I'll make a video section on how to trade on doji, so don't be confused. I don't have time to explain more on doji. See that it's continued the market. The next candle close as a green candle. The next candle here form, consider finally we have a seller's candle from the seller's zone. Well, look at this candle here. You might be expecting the next candle to be a red candle. Well, even me, I will go with sellers, but before I go with sellers, I must have to confirm. Why should I go with sellers? I must have to confirm properly. Okay, I can't just trade blindly. So what I'm going to do is I'm going to shift this line, this upper line. Then this, I'm going to shift it here. Okay. Okay. So which means if I draw the if I draw the area perfectly, it should be something like this. Okay. Let's say this candle is still inside the zone. Okay. So now this candle got rejected from that zone, from that area, seller's area. So I think I expect seller's entry, but before I could go with sellers, I must have to redraw the area, the line. I must have to redraw the line so that I won't make any mistake. So if I redraw the line, this is how it's going to look like. So I'm gonna go with buyers again. Okay. If I go with buyers, then candle close inside the zone, then that is when I will go with sellers. Okay. You can see the market is now bullish because of this reversal that occur. Reversal did not occur here. We see the market is far away from the buyer zone. That is how we have in this rejection. Okay, just like when we have a set stop order. Okay, a set stop here, a set stop liquidity. Okay, the set side liquidity. Okay, set stop here. Then this kind of break the set stop area. Okay, so it look for a demand zone, the order block, before it finally reverse. Okay, so that's what we call set stop or set side liquidity. Here also we have the buy side liquidity. We have the buy side liquidity here. So the market have taken out this buy side liquidity, so this buy side liquidity, this buy side liquidity, and this buy side liquidity. So it's now create a double top pattern. But I think this is how you can analyze the market. So this is how I trade. I think OTC market I resume. I wait for about 4 hours before I trade on OTC market, 86 percent. Okay, so right now I'm going to stop this video. So in case you want to learn how to draw buyer's area and seller's area, maybe you have been struggling on how I draw it, or you want to draw, or you want to be good in trading buyer's area and seller's area, or you want to be good in analyzing the market or viewing the market like a professional. Okay, in case you want to be viewing the market like a professional, just check my contact details in the video description below. So you see my contact details, my phone number, my Telegram channel, my WhatsApp number, my email address. Okay, so in case you need any information. Okay, guys, so I'm going to stop here today. Reason why I trade with $30 is because the $4 is because I'm not in the mood of taking trade today in binary option. Just want to explain some few things on how to trade on one single pair based on buyer's area and seller's area. Okay, so that is why I took trade on uh, $4. Actually, my balance is $5. $5. Is it $5? I don't know. Let me see how much I'm having now. I'm having $28. You can see just a few profits. I'm having $28. Small profit and good trade. Small profit and good trade. So I'm having $28. So there's no need for you to overtrade the market. You overtrade the market, you won't able to make it. Okay. So I'll see you guys in my next video. And if you like my video, please like, share, and subscribe. Thank you.